It is you, as you may already be aware, the countdown has begun, and the narrative that is being conveyed throughout the XRP community is reaching a level of intensity that has not been witnessed in the past few years. This is something that has not been seen in the past few years. The belief that the regulatory wall that has been keeping institutional money from flowing more freely is finally coming closer to the point where it may break is the driving force behind this. In actuality, it is being driven by this assumption. The Securities and Exchange Commission, SEC, may make a decision regarding a hypothetical spot XRP exchange-traded fund, ETF, on November 15th, which is being referred to as the D-Day, for the purpose of making a decision. Despite the fact that this date has not been formally officially confirmed, it has been magnified across forums, experts, and groups that are driven by speculation as the moment when the floodgates could open. When Bitcoin's spot ETF approvals caused more than $10 billion in inflows in the first few days of trading with the cryptocurrency, the momentum that is driving this rumor derives from the precedent that was created earlier this year. In all honesty, this rumor is a result of the precedent that was made earlier this year, because it demonstrated how eager institutional investors are to get exposure to digital assets through vehicles that are regulated and known to them. That particular moment resulted in the cryptocurrency market experiencing a turning point. This was due to the fact that it exposed how eager they are to do so. A pent-up demand that had been waiting for the official approval from the authorities was brought to light by the sheer speed and quantity of those inflows, which surprised even those who have been monitoring the market for a long time. This brought to light a demand that had been waiting for the official sanction. Not only does this imply that traditional finance is ready to gain exposure to digital assets, but it also suggests that they are looking for the legitimacy and structured access that regulated exchange-traded fund products provide, since they are looking for these things. Exchange-traded funds, or ETFs, bridge the gap between the two, offering a sense of security and compliance, despite the fact that many large organizations are still unable to be in possession of cryptocurrencies in their entirety. This precedent has been woven into a narrative that paints XRP as the next logical institution's darling, and supporters of XRP have utilized this narrative in their advocacy for the cryptocurrency. Because of its established payment utility, swift settlement infrastructure, worldwide banking presence, and rising track record of real-world use, as well as the fact that it has a growing track record of acceptance in the real world, in addition to the fact that it is a strong candidate for similar institutional interest. They are of the opinion that the ongoing fight for regulatory clarification places XRP in a position where it is directly in line for widespread acceptance in the event that the Securities and Exchange Commission, SEC, eliminates its hesitation. The expectation is that a regulatory breakthrough comparable to the one that occurred with Bitcoin will result in the unleashing of a torrent of institutional capital. Besides the fact that XRP is widely considered to be acceptable, despite the fact that there is no verifiable confirmation of a scheduled approval decision for an exchange-traded fund ETF involving XRP, the traditional banking business and the cryptocurrency world continue to be filled with speculation. This is the case despite the fact that there appears to be no scheduled approval decision. TCL. Rumor mill continues to produce rumors, and anticipation is increasing as the day gets closer. This is despite the fact that formal statements have not yet been made. There is a narrative that is, because of the expansion of ideas, forecasts, and countdowns on social media channels and discussion forums on the internet, there is a growing sense of urgency and excitement. This is due to the fact that there are more and more of these things. When it comes to the scale of the demand that may be generated if the project were to be approved, there are some individuals who are even suggesting that the market has drastically overestimated the magnitude of the need. Retail traders, as well as experienced analysts and institutional strategists, are currently contemplating the possibility of a rapid increase in interest in the market. The potential of this happening is being discussed by more than just this particular group of people. The fundamental driver of the hype cycle, according to the experts who study the hype cycle, is the growing institutional appetite for diversification across digital assets. The fact that the landscape is rapidly shifting and that major companies are keeping a close watch on new opportunities that are currently available is being emphasized in particular. People are guessing that if XRP were to gain full regulatory clearance, it would have inflows that were even higher than those that Bitcoin experienced when it was originally introduced. This is something that many people are thinking about. The market for digital assets could experience a shift in the balance of power as a result of this scenario, which could result in the establishment of new records for the industry. In light of the fact that projections of the momentum that such an event would generate are typically portrayed in a manner that is both hyperbolic and symbolic, the feeling of anticipation is readily apparent. These kinds of estimations include estimates of $50 billion, for instance. Additionally, everyone's attention is still concentrated on the potential outcomes that may occur on November 15th. The argument is not based on the results that are promised. Rather, it is based on the perceived advantages that XRP possesses in matters of utility, real-time settlement, low transaction costs, scalability, and its position in talks regarding cross-border payment throughout the course of the last decade. Despite the fact that these figures are merely estimates from the community and are not based on official forecasts, it is essential to understand that they are a source of fuel for the rumor that prices around $27 would be only the beginning of a much larger surge should institutional demand match with retail speculation. This is something that needs to be understood. Catalysts that have been verified as being effective, as the story becomes more vivid, this concept that the next 3 days and 14 hours represent the closing window before institutions, potentially position themselves for what some claim would be a seismic shift in the cryptocurrency environment is really beginning to emerge. In a significant way, the script develops around this concept. Supporters have developed a fairly dramatic image of the SEC standing right on the verge of its final pause. This graphic is intended to convey emotion. In light of the fact that the Ripple litigation is approaching closer and closer to being settled, it is clear that institutions have been waiting for this background information. In the past 10 years, the world of finance has been marked by a gradual accumulation of regulatory friction, persistent corporate hesitancy, and, to tell you the truth, a large amount of utility potential that has not yet been fulfilled, particularly in relation to digital assets such as XRP. These characteristics have been characterized by the fact that the world of finance has been characterized by these things. People who are familiar with the industry commonly refer to this time period as one of waiting. During this time period, innovation is being stifled due to the presence of uncertainty. It would appear that all of these factors are colliding at the present, which is creating a crucial moment in which a single regulatory approval has the potential to profoundly shift the entire narrative that surrounds XRP. There is a possibility that XRP will transition from being regarded as a speculative asset to becoming a fully regulated financial instrument that is legitimate throughout the mainstream. This changing portrayal positions the XRP ledger not simply as another blockchain, but rather as a potential backbone for global liquidity. This is a significant change from previous depictions. It is rumored that it is prepared to take in multi-trillion-dollar flows from global banks, fintech companies, and even remittance systems at the sovereign level, provided that the appropriate conditions are met. According to the XRP ledger, this is the position that it is currently holding. The fact that it is an ambitious aim does not change the fact that it is more in line with long-term technological goals than it is with the current budgetary reality. The disparity between what is achievable and what is actually occurring in the present day is brought into focus by this. However, despite this vision is pretty powerful still. The kind of narrative that contributes to the viral intensity of the current conversation, which in turn inspires debate and enthusiasm among the financial and cryptocurrency communities all over the world, is the kind of narrative that comes to mind. The script then continues by underlining the fact that investors frequently fail to grasp the rapidity with which market psychology can shift in reaction to the arrival of institutional signals. This is the next step in the script. In the essay, it is described how, for instance, the acceptance of Bitcoin's exchange-traded fund, ETF, transformed years of skepticism into just a few days of enthusiasm that was fueled by inflows. As a model for what they regard to as the institutional ignition point, the community of people who support XRP cites this historical turning point as a reference. They argue that whenever a regulated channel is launched, there is an immediate surge in demand that has been building up for some time until it finally happens. In addition, to tell you the truth, narratives shift at a rate that is faster than the ability of retail traders to modify their responses. Immediately after that, the conversation